Welcome to the new energy market news for May 2019. As usual, we will start off with the macro news. And a lot has been going on the front of the trade war between China and the US. Recently, President Trump announced that he would increase tariffs on an additional $325 billion of goods imported into the US from China, while China retaliated with an increase on an additional $60 billion of goods imported into China. President Trump is even threatening now, by the end of May, to impose a flat 25% on all goods imported from China. Closer to home then, looking at the Brexit saga, we see Nigel Farage's Brexit party steaming ahead in the polls and becoming larger than both Tories and Labour combined. This means that in the lead up towards the 31st of October, the new deadline for Brexit, discussions will be becoming very complicated between both parties. On oil then, where tensions are rising as well. This weekend, news broke that 2 Saudi Arabian tankers which were going to fill up in Saudi Arabia were sabotaged. Although for the moment it is unknown who would have performed this sabotage, the likely culprit is going to be Iran, of course. Due to this, we saw oil prices rising up to $72 a barrel. However, this rise did not last for very long because of the heightened trade tensions between the US and China, pushing stock markets and thus growth figures downwards. On gas then, due to the recent highs on emissions, up to 27 euros per ton, gas prices started moving upwards again. However, also due to the trade war news that broke, we saw again TTF Cal 20 going below the 19 euros a megawatt hour. Demand for gas remains still lower than last year due to the exceptionally good weather, while on the other hand the supply has been quite vigorous. Pipeline supply remains very strong, while LNG cargoes continue on being on record levels. On the other hand, own production within Europe has continued to drop, where we see now 15% lower production than last year. If we would compare it to 2013, it would be even 70% lower. So this will continue to decrease in the future. Negotiations between Gazprom and Ukraine are also continuing concerning the capacities for gas for starting from the 1st of January 2020. As I already mentioned, emission prices have dropped a bit. On the same time, we've also seen coal prices going below $70 per ton. Due to this, power prices have also started to retreat. As you can see, the Belgian power price Cal 20 has come back to about 51.50 euros per megawatt hour. In Germany then, we have seen quite a few hours where negative pricing was to be seen due to a high availability of renewables, mainly solar and wind. This has been insufficient to push forward prices down, which continue to be driven by the fuels on the one hand and the emission prices on the other hand. Thank you very much for following this session of the ENGIE Energy Market News, and I'll be happy to see you again next month.